Hey everyone, welcome back to Corporate Decoder. Ever feel like you're watching a corporate soap opera where the next episode might involve a dramatic exit or a surprising plot twist? Well, today we're diving into ContextLogic, also known as Wish, and their latest 8K filing which hints at a possible cliffhanger. Will they stay or will they go from the Nasdaq stock market? Here's the headline. ContextLogic, the company behind the Wish e-commerce platform, has been warned it could be kicked off the Nasdaq stock exchange. The reason: Nasdaq thinks Wish might be a public shell. That's a term for a company that doesn't really have an active business and is just holding assets, waiting for something else to happen. Wish disagrees and they're planning to fight this. So what's a company to do when facing a delisting? It's like being told you're not cool enough for the club. Wish plans to appeal this decision. They're asking for a hearing. A hearing is like a trial, but instead of a judge and jury, it's a panel from Nasdaq who will listen to Wish's side of the story. At this hearing, Wish needs to convince the panel that they are not just sitting on their assets. They need to show they are actively trying to grow the business, maybe by investing in new ventures or buying other companies. Basically, they need to prove they are still a real operating business and worth keeping on the Nasdaq. There's no guarantee Wish will win this appeal. If they lose, their stock could be delisted. Delisting means the stock would no longer trade on a major exchange like Nasdaq. This can make it harder for investors to buy and sell the stock, and often leads to a drop in the stock price. So this is a pretty big deal for Wish and its shareholders. Now let's step back and look at the bigger picture. Wish was once a very popular e-commerce platform, known for its super cheap goods shipped directly from China. But in recent years they have struggled. They face competition from other platforms, problems with product quality and shipping times, and a general shift in consumer preferences. So what does all this mean for Wish? Well, it's definitely a challenging time. They're fighting to stay on the Nasdaq, trying to turn around their business and facing a lot of uncertainty. The outcome of this Nasdaq hearing is crucial. If they can convince the panel they have a viable plan for the future, they might get a second chance, but if they fail, the future of Wish as a public company looks very uncertain. In my opinion, this situation highlights the risks of investing in turnaround stories. Wish had a lot of promise, but they haven't been able to deliver on that promise in recent years. While their efforts to revitalize the company are commendable, the odds are stacked against them. The e-commerce landscape is fiercely competitive, and Wish faces significant challenges in regaining its lost ground. The risk of delisting adds another layer of uncertainty, making this a very risky investment. Thanks for watching. If you found this breakdown helpful, please hit the like button, leave a comment and subscribe for more corporate deep dives. Until next time,